I'm going to break down my short trade on Aussie dollar that I took last week and closed out on Friday at the close. Starting here on the daily chart, come in and we'll see this price action here, where last week we get this buy side delivery above the previous week's range here. And then we get this candle here, which is Wednesday's candle, which wicks above Tuesday's candle, and then closes back inside the range of Tuesday's candle, which gives me a sell side draw on liquidity the following day. So we can see price action here on Thursday pulls back and then delivers here to the sell side where I was able to take an entry. Another thing that got me into this trade, if we come down on the 1 hour chart, this here was the dealing range for that price action, and with that you can see price action delivering to the sell side here, putting in these market structure shifts here to the sell side with body candle closes. You can see body candle close below those levels in this candle. And then you can see here getting a series of bearish fair value gaps or sell side imbalance, buy side inefficiency in this price action. So seeing trending market conditions. With that, going over to the 4 hour chart. This is that area on the 4 hour chart, and from a multiple time frame analysis, the 4 hour chart was bullish at the time. On the 1 hour chart with these body candle closes and bearish fair value gaps, then on the 1 hour chart seeing sell side delivery or bearish with these body candle closes below these swing lows, and then the 15-minute here followed the 1 hour. So a sweep of buy side liquidity on the daily chart here. This Tuesday liquidity here swept out, and then trending price action leaving sell side liquidity behind in these bearish fair value gaps, and 2 out of the 3 multiple time frame analysis charts showing bearish price action. So this all gave me a sell side bias and bearish confirmations on that sell side bias. Then coming over to my execution charting, bring your attention down here to the 1 hour chart. So taking that entry, pull back here. So this being the high here, that is the same high that's here. So these highs are the same. Using this as my stop loss, you can see price delivering to the sell side, pulling back to the buy side here. I take an entry here as price pulls back to this 1 hour order block, or near this 1 hour order block. You could call this the order block because it is the highest candle here, but also this is the order block from the lowest to the highest here. So here, having this order block in place, price trading back into it and then delivering further to the sell side. And I start taking profits at liquidity levels here. So there's a 60-minute or 1 hour liquidity level here and here, and there's 1 hour liquidity and fair value gaps in this area here. At about a 1-to-1, I take 50% off here, and then with further sell side delivery, I start taking partials off as liquidity is being swept. This liquidity had been swept, and now we're getting into this area of liquidity where there's fair value down in this area. So I took more profits down in these liquidity areas, and then price delivers here further, and then I am targeting on the daily chart this level here, which is the high. I believe that is like that little pigtail candle that comes in on Sunday here, which is the rebalance point of this bullish fair value gap, and also the high of this candle here, which is Sunday's candle, this partial candle. So I wanted to go for a rebalance of that. Actually, I'll go back over to my analysis charting and explain why I did that. The reason why I did that is because the high of last week is right here. This is the high of last week, and I'm going to mark that. This is the high of last week. And you can see the high of last week, you get a body candle close above that level right here in this candle. So this gave me, or this tells me that price, or I would say price has a higher probability of returning above this level, as opposed to taking out the low here. So looking at these bullish fair value gaps as likely areas where price would likely reverse. So seeing this, seeing Aussie dollar as being strong, as some other pairs failed their weekly or the previous week's high and then started to sell those, I actually sought the weekly low here, but with this one I did not seek the weekly low. I just targeted this rebalance point, the lowest point where I would imagine price would deliver before reversing. And then back to my execution charting for this last profit taking, which was down here. And that is in conjunction with this level here, and you can see price went a little bit lower, and now price has started to deliver here to the buy side, but based on how things are looking now, I'm actually looking at Aussie dollar for a potential short trade. For my history, let's look at last week. Here, okay, we can find Aussie dollar in here. So here we've got Aussie dollar coming in here. You can see Aussie dollar here. And then the last position here. So you can see just taking profits here. So this is basically last week's price action here. A few errors, and this here is a similar error to this here that I made this morning here. Being a bit impatient, but getting better at being more patient here. But yeah, this is my breakdown here on Aussie dollar. If you'd like to know more, visit us at ontilttrading.com. Stay on tilt, never emotional. We'll see you next time.